Okay, see, the reason why I called you guys' attention to this Euro AUD and Euro NZD trade was two reasons. And I just want to, I almost wanted to close my laptop just now, go to bed, go back to go and sleep or go and do something else. But, I'm a very patient person and I like processing things. Now, the reason why I called you guys to this trade, especially the Euro AUD trade, is this. Now, we know from the daily time frame and from the weekly time frame that UAUD is in a massive uptrend. So there are sometimes the market will like to, throw you off balance and, make you make some harsh or rash decisions when you're trading. But if you really know what you're doing, you will not get food, you will not get food. And it's okay to take a loss, no problem, because you need to take that loss to preserve your account. Are you getting it? And also know that you have been able to make that money before. You can also make the money again. That's why risk and money management is very vital in this business so that in times like this, your fear will not come because even though you know what you're doing, if you took a very, very higher than what you have on your account, getting to those, drawdowns or those stop losses and large, you just get thrown down. So like what I've explained in my previous videos, you can see that EURUSD on the weekly time frame is in a massive uptrend. Are you getting it? Because this is an uptrend. It's still an uptrend. So I will not let what I'm saying on lower time frame come and shake me off. But there is something that must happen before you can get taken out of the market. So this is what I have for what happened. Okay, this is what I have for Euro AUD. But something is happening on the lower time frame right now, and I've been entering some kind of trades. Why? There's a reason I'm not leaving that market. That's what I wanted to bring to your attention, and I wanted to find out because if after learning all the candlestick and all your chart patterns, you get food in this kind of things, and don't use fundamentals to say, oh, fundamental was the reason I lost money. You were not supposed to lose more than you're supposed to lose because you calculate your losses already. Are you getting it? But if this was truly an uptrend and normally this is a continuation, are you getting it? This was higher high, higher low, higher high, higher low. Why would the market just retrace from here to the downside? That's a question you must ask yourself. So if we have that, we come to our daily time frame. I started from my weekly just now. We have that, come to our daily time frame. Are you getting it? The daily time frame right now is showing serious, massive bearishness. Are you getting it? The candle is bearish, but we still have about 5 hours to go for today. Now, what's your 4 hourly time frame saying? And the candle is bearish, and the reason why we are facing those massive is because of this massive drop is because of this resistance you are seeing here. Because on the daily time frame, we had the previous resistance, we came again, found the resistance, but we were able to, um, sorry, let me start from the bottom. From the bottom right now, this was the previous support, turned a new support, and we came and found support again. We are here to get to this next resistance to even say that, okay, we'll have a double top to start coming down. For that reason, don't get carried away. Are you getting it? I'm just doing this video for someone and I don't want to say more than this because I might upload it on my YouTube page. Watch, don't get carried away. The daily time frame is bearish, no problem, but the weekly is still bullish. Are you getting it? The weekly is still bullish, but the daily time frame right now is showing sign of bearishness. Don't get carried away. Let me show you something. Now let's come on the 4 hourly time frame because hold on, hold on. We are still bullish on the daily time frame. Why? Because if this was a bearish market, are you getting it? This market needs to break down the daily. Are you getting it? Creating a double top here. The reason I'm doing this video, so once you can break down my daily to this area, then retest or break down my daily. Are you getting it? Then making here a double top. And what's my criteria of forming a double top? just make sure that you must break a previous structure, a higher low, a higher high, before you, I know you switch to the downside. Now you must break this higher low before I know that this market has switched and retest that broken structure, could not break to the upside, then continue to the downside. Without that, my daily is still what? Bullish. It's just my candle that is bearish. So I would further drop to maybe my 4-hourly time frame to see what is happening there. What is my 4-hourly time frame saying? Now let's come on 4-hourly time frame again. You can see that the market still have an important area of value on the 4-hourly time frame, which it bounced from again. So the 4-hourly time frame to me is still what? Bullish. How? Because look at, this was a previous resistance turned support, and we came back and found support 2 times again, which switched the market to the upside. So if this was truly a double bottom, are you getting it? I need to see a break to the upside. And that's not just a break, that's a change of character to the upside. Now, listen, I'm coming from somewhere. Now, this is a what? A change of character to the upside. So it's either I use my Fibonacci trend extension, my rectangle, or I use my trend line to say this is a change of character to the upside. And what has been happening during that change of character? We have been breaking structures to the upside. Yes, so since we're breaking structure to the upside, this is our next week low, week high, sorry. So I named this place week high. Now, focus. I might be going too strong. I guess, but focus. The reason I'm doing this, if I could take this change of character up quickly, when the market switched, it created an uptrend here. It created a double bottom uptrend, which switched the market to the upside. I have a trade I'm working on right now, and I'll be entering the trade from these old areas to go to the upside, but the fundamentals today brought it down. I guess there's a reason I'm doing this. So I'll go to the 1 hour time frame. I guess now the 1 hour time frame, what are you saying? What are you saying? Remember, the weekly is bullish, the daily structure is bullish, just that the candle on the daily is a little bit bearish. Then the 4-hourly is a little, candles are bearish. 4-hourly candles are bearish. Let me see. 4-hourly candles are bearish, but the structure is still bullish. Reason because we've switched to the down upside already. Now watch. Let me tell you something. No matter what you are saying on your lower time frame, I'll show you. Unless this structure breaks to the downside, then retest this broken support, now turn resistance before you can start selling. Let me show you that if I can have that on. Something happened today, so if I can shake my USD, okay, it's called USD card trade. Look at something now. This market was in an uptrend. This is what I was trying to explain. This market was downtrend, broke and changed character to the upside. So we found support on this particular resistance and support. We came and found a major resistance on the upside. I'll show you. Let me show you that. But the moment we came down here and broke it down again, this market has finally done what? It validated this change of character to the upside, switch to the upside, that you saw, and is now bearish. So this market might just come down. Once it comes back to retest this particular area again, what do? You enter a sell down to the next major resistance. That's what I'm trying to show you here on EURAUD. Why you should not get carried away when you are trading structures. 4-hourly structure is still bullish. Daily structure is still bullish. One weekly structure is still bullish. So don't, because of what you are saying on the lower time frame, change your mind of leaving your trade even though you're in losses. After all, your stop loss was supposed to be, even though you enter a trade from here, you should know that after this double bottom switch, you saw change your character to the upside and we broke structure. You should know that this whole area, the market is never supposed to approach this whole area again, except it's coming to take demand from this new demand zone that changed character to the upside. So normally what I do is that I label this whole place a demand zone, where if it comes into that demand, it might find demand because the market is still what? Bullish. So the market is still what? The market is still, double bottom, change your character to the upside. So the market to me switch to the upside in this area. So it's supposed to come into it or bounce around that area and go back to the upside until we cannot break this before we know we're going down. So I know this might be too much to explain, but definitely I want to show you something. Until this particular area, because a lot of people are living now, until this particular area that I've just drawn here now breaks to the downside, like I showed you on the on euro on euro what's it called, euro card, USD card, sorry, on USD card, you are still what, bullish, because a lot of people will process this, like, okay, let me take this off. A lot of people will process what is happening here right now in the lower time frame as head, left, right, left shoulder, head and shoulder. Are you getting it? Head and shoulders pattern. And they will just start, selling from here, saying, thinking that the market will just continue. Have you processed your entire market structure before you are entering a sale and putting your stop loss above here because you saw a head and shoulders pattern on the 1 hour time frame? Process your higher time frame structures first before you get out of the market. After all, you're supposed to enter a proper entry from after this break, enter from 370, which I entered from. Yes, most of my trade was from 370. And after this break of structure, I think I entered on that one on this. But before I woke up this morning, something happened. Let me show you what happened. Now, the market was doing what? After his double bottom, came for a retest, broke again, and was retesting. So what I have was that this market will continue. We immediately broke down. That's why I knew that, okay, they will use the fundamentals of CPI today to do a joker on a lot of people, throwing them out. But I will not go out of that trade until I see this massive break to the downside and even breaking below this head and shoulders pattern, because this whole area right now is a large demand zone that can take this market to the upside. So unless we are breaking above all those buy, and we're not seeing it buy again, breaking the structure to the downside, testing it before you know that you are in this market has finally switched to the downside. Until then, no problem. But I know we might be coming back to my trade. Some trades I entered from here right now might be coming profit already. So I'm ready to take this loss, and my stop loss has been decreased from inside here to here. So I'm expanding my stop loss more to accommodate. But I'll be watching my price action on my lower time frame to see whatever is happening, because I will still be a little bit worried. Then I'll go to my 15 minutes time frame. I'll still be a little bit worried. And why? Because I just want to see a switch back to the upside. So immediately this happens and I see a switch back to the upside, are you getting it? I will know that they just did what they did. Are you getting it? On the 1 hour time frame to throw a lot of people off. But until I see a switch, this market is right now bearish on the 1 hourly chart. So I'm looking at the 15 minutes price action to check what is happening. Are you getting it? So once I see this market go like this, retrace a little and break above, this market has done what again? Switch to the upside. So definitely, if you've not entered, then you can take this, what's it called? Market structure and price action entry. Sorry, what's it called? Price action entry and enter from there. Put your stop loss below this whole area. Continue this trade to the upside. So this is what I wanted to show you guys, and why you should not panic in times like this, unless you don't know what is happening. Because if you know what is happening, you should know that these red candles you are seeing is just there to make you be very, very fearful to get out of the market. You are not supposed to get out of the market. After all, this was 1.6370. Your stop loss is below 1. What's it called? Maybe 1.200. Let me say 1.200. That's about 270 pips stop loss. Calculate your risk and money management into it. If it's going to kill you, Are you getting it? Or if you see that the market is still continuing the switch on the 15 minutes time frame to the downside, you can decide to leave first and see if it will come back to the downside inside it very, very well. And if it's still going to switch again, you will know. And once it switch, you might break back into it and continue upside. But for now, the market is still bullish. So don't try to make sure, don't sell. If you are still in the market, don't cut your loss. Put your stop loss either below here for conservative loss, or put your stop loss below here for a more, macro loss. So whatever is happening here, don't let it throw you off balance. This is what I wanted you to know. You can apply that in your other chart. Um, as for gold, I love what I'm seeing right now. Let me just add gold to this. I getting it. Remember, watch all my videos. We've been talking about this descending. We've been talking about this descending wedge, which is a bullish continuation pattern. We're waiting for to break to the upside. We test 1940, continue to the upside. Right now, we are hitting it. Let's drive it from the daily. So from the daily, waiting for no point. Okay, let me just go for the 4-hourly chart. Whenever you see this wedge is a bullish continuation pattern. So inside that wedge, let me see if I have on that chart that's clearer. Okay, inside that wedge, sorry, is cleaner. Okay, let's use this one. Aside from the wedge itself, we have something on that thing again, a bullish ascending triangle, which is a bullish what's it called? A bullish ascending triangle is a bullish continuation pattern or a bullish reversal pattern. So this is a reversal pattern you are seeing here right now that has broken to the upside. So we're testing that what's it called, ascending triangle. Those are my market, what's it called, chart pattern traders or price action traders. We're testing that wedge. I get it. For my span, leave it, let it go anywhere you want to go. There's still a resistance above 1970 to 1980. We might definitely find that resistance and come back. Are you getting it? And enter, or we'll break above it, make it a support, enter from here. So always enter conservatively if you are a low capital trader. Don't FOMO. We've broken out, yes, but always we enter from 1956 right now. That's 156 pips stop loss before you now find your conservative stop loss about maybe from 1955 to 1920 right now, or even maybe 1915 is about 400 pips to the downside. Do you have the money to enter now? What if you can wait and it can give you, or you wait for this particular one that will break above again, retest it and continue going? So these are your two conservative entries you can enter here. Are you getting it? So this is how the market actually works. If you know what you're doing, this is how the market actually works. So in times whereby you are seeing a fearful market, don't get carried away. Don't leave the market until you see a proper break to the downside. That is what I want to show you. Same thing on Euro NZD, because if it's happening on what's it called? Euro AUD. That means it's happening on Euro NZD. Now look at what happened on Euro NZD. Yes, the market is breaking to the downside already, but I will not get carried away. Let me take this off and drive it on Euro NZD for you, because I am on this two trade. So Euro NZD, this was where the market actually did what? It changed your character to the upside. So after that change of character, we will definitely do what? Find a retracement to the downside, which if you bring your Fibonacci trend extension in from here to here, you see that the market actually reversed from 0.5. So this market is still in an uptrend. So normally, where if you are to definitely to swing this market, you should know that you should be waiting for this entry retracement. So if you're on that entry retracement, until that entry breaks to the downside, you are still uptrend. So don't let whatever is happening on these what's it called? Don't let whatever is happening on these massive candles, definitely when you're seeing big red candles, you should be scared about what's happening to your trade. Are you getting it? So right now, you still can see that the trade, the market is still 3 hours, 1, 2, 3. Is it 3 or 3, 4 hours of massive sell? that have been happening for the past 4 hours. But until this breaks, you are still bullish. So this market can just decide to, throw you off by, trying to, you guys are trading, what's it called, support and resistance. Definitely you will say this is support, this is a previous resistance, previous resistance, previous resistance, sorry, previous now resistance and support. So if he breaks it, will bearish already. You now start selling from here to the downside and thinking that you are coming back to break structure to the downside. What if this market just switch back to the upside for you in this area, continue back? What will you do? So learn your market structure. Yes, it definitely might just do this around here and come back to our main, what's it called, before going back up. So know your areas. Your most important areas are where your market actually did was switched, not at these areas. You are just entering from these areas. If you have entered from these areas, you are entering from these areas to continue the market to the upside. But you are supposed to do what? Put your stop loss below here, below here. So you calculate your risk to reward, even though you are entering and you are seeing an uptrend already in the market and you couldn't enter from here, you entered on this next one. Know that your stop loss is supposed to be below where the whole market started from. Or you can enter here conservatively that it might just come back here and touch you and continue. What I usually do is that I don't care how large my entry is, I calculate my stop loss to put it below here. So even if it's 400 pips, I usually bring that. If I was using a one lot before and my one lot is 100 pips, I usually divide into four places. So one lot divided into four is about 0.25. So that I can accommodate my 400 pips stop loss now, because this is about 400 pips to the downside now. So if I've entered from here, I will divide my 400 pips into it. Instead of one lot, I will divide into 0.25 and use 400 pips to enter the trade, so that in case I'm swinging it to the upside and anything happens like what is happening today, even though it gets here, it will not take me out. But if this trade comes down here, that means that trade has been validated and continue going. So your risk is very, very, very important. Your risk and money management is very, very important in this business. And aside from your risk and money management, don't get carried away about what is happening on your days, especially fundamental days, because if you wanted to enter this market very well, you would have entered from here. Or if you have entered from this next one, you should know that your stop loss should be below here or below here. Are you getting it? But conservatively, you're supposed to be below here, because this market is not supposed to come and break the structure which it switched the market from. Are you getting it? So even though you're on your lower time frame, you should know what you're doing. Are you getting it? But overall, what is Euro AUD saying on the higher time frame? This how you will know and find out, and don't just get carried away. We are still in this. Sorry, let me see if I can see anyone NZ that I have not used. Hold on. Okay, so this is one we have not used. Look at this is the daily chart. What has Euro NZ been doing? Higher high, higher low, higher high, higher low, higher high, higher low. Are you getting it? So is it going to create on that higher high, or is it going to form a double top? Are you getting it? And form a break and downside. So let me just show you something daily quickly. I'm saying, so if this is going to turn to, you will know. Look at, where did the market break from? Same thing we did. Market was coming down, broke structure to the downside, but switched to the upside. So this is a change of character to the upside, and it came down, couldn't break down, came up. This market is still in an uptrend. So we have an uptrend. So until this particular area breaks to the downside, you are still in an uptrend. So the market can just do whatever it wants to do and reverse to the upside. So you don't get carried away, because this was your last major, after this change of character to the upside. Here is now your last major, what's it called? Area of value. So this market, until it comes here, until this market comes here and forms something called a head and shoulders pattern, even after forming a head and shoulders pattern, it needs to break it. Are you getting to retest and couldn't break up again before you start selling to the downside? But for now, till now, no matter what is happening on this chart, this market is still what? Bullish. So your candle have not even closed. You are concluding already that this market is now bearish because of what you are saying on your lower time frame. Even your lower time frame, is it still bullish or bearish? Look at your 4-hourly structure, your last structure right now. So if this was indeed a change of character to the downside, are you getting it? If this was a change of character to the downside and the market is really bearish, I will show you something, a formula now you use to know the market is really bearish. And you are responding from 0.618 area, which is a sell kill zone to the downside. This market is indeed bearish. Let it come and do what? This was where it found the switch. Until it breaks that switch, where it switched to the upside, even though internally, and this market was indeed a bearish structure, which I believe is reacting to right now for people that thinks that, okay, on a market structure perspective, this is a change of character to the downside because this was a break of structure to the upside, and that was the last structure itself. This was a break of structure to the upside, and this was the last structure that broke that structure to the upside. So this is a change of character to the downside. If this is indeed internally, I did not go to daily now. This was internally change of character, and this market has switched to the downside, finding resistance here. Are you getting it? Find this resistance here. The difference between the uptrend and the downtrend right now will now be either break to downside, test and continue to downside, or break to the upside and continue. So a lot of people do wait for this market to get to these areas, are you getting it, before buying and putting their stop loss, or before selling and putting their stop loss, are you getting it, and start. But conservatively, as a trader already, are you supposed to be waiting for this? No. Wait for, you're supposed to enter from here, so your stop loss is under here. So you might have even had break even right now, knowing that definitely anything that might want to happen, are you getting it, will bring this market down here, are you getting it, then break it, sell, continue selling. So this is what I have for you right now. Or you can internally check whatever is going on. And I believe a lot of people are reacting based on what they are saying here. I've said it before, that this market was so. This was the reason I called the attention of some of my mentees just now. They should not get carried away trading internal support and resistance. Are you getting it? Because they will call this an area of value that is not supposed to break. What if it was a joker to take a lot of people that entered from here and put their stop loss tighter under it, to take them out and continue this market to the upside? So until this breaks, I am still bullish. Are you getting it? So this is what I wanted to bring to your attention to add to your trading journey. Are you getting it? Until you see this particular break, don't retest it perfectly well, not just an ordinary break, or you're not just in one break. Wait for it to, find a way of coming, switching, and not aggressively, conservatively switching to this area back that has broken right now. You getting it? Just give it time, process. Don't FOMO, don't rush in. Once it gets to that area, so if I'm selling GAP card right now, this is what I will be doing. I'm not going to rush into whatever is happening right now. So I'm going to wait for a break and retest, or probably a ascending triangle, which I know that will definitely break to the downside. Enter from here, put my stop loss 100 pips or 200 pips, then start selling to the downside. So that's how I manage my capital. This video is becoming too long. I'll end here for now, and I'll be waiting for my conservative entry for gold, as I've told you before. So I'll be on my smaller time frame, checking whatever is happening on my smaller time frame right now. What caused this particular break of structure is this other blocks from 1940 to 1935. So even though we'll come back into it, I need to see a small switch on the 15 minutes time frame, my stop loss underneath here, and enter from here conservatively and start selling to 2050. This is what I have for you. This is what I have for now. You can see that the market never does what the market never fails. The market will never fail you. The market has been in a downtrend. I getting it switched at this 1912 area. See what happens. See what I'm trying to tell you now. You see this? I think some days ago we did this head and shoulders pattern switch. Are you getting on the downside? We switched perfectly well. Let me show you something now. I think it's even happening on gold here. This market actually switched to the upside around here. Are you getting it? But see what happened. wash. After changing character in this place, becoming support, it went up, came down, broke it, and a lot of people start selling from here. Now, sluggishly, he reclaimed it back, came back to retest it. Are you getting? So if you have entered from 19 to 13 area on the fundamental day, you would have, you can see that the market was still doing what? Breaking structure and changing character, continue the market to the upside. So right now, we have done what? So see the joker that happened here that I'm expecting on Euro AUD. Now, you see, look at it's recovering. It's recovering. Low, you might have got your loss right now, but you can see that it's recovering. So what if it recovers and continues market to the upside? You've got your loss already, you're out of the market already, you are fearful because you don't know what and how to trade this. I'm back in profit, definitely. So to me right now, I am not fearful because I know my areas of value, I know my structure, I know how to trade this market, like I'm showing you on gold right now. Because this market actually went down. A lot of people think, okay, this place has been validated. They did not even wait to confirm. And it was even showing, let me show you something. It was even showing a sign of massive weakness. It was even showing a sign of what? Massive weakness. Let me go to the 15-minute chart back. Or the 30-minute chart. Okay, let me stand here. Or 30 minutes to be clearer. So you should be looking at your structures and your price action patterns when you are trading. Look at this was the last area, this was the last one that switched this whole downtrend. I guess in the switched it and even broke during a fundamental news. And normally we waited for a sluggishness and you enter the sell, but you did not wait for another switch to the downside. Like I usually tell you that okay, if this market was sluggishly, just wait for a switch. Once you switch, you can enter from this last, not this major one. Enter from here, put your stop loss above it, and continue to the downside. Always wait for your change of character. Without that, you enter blindly to take you out. So most of the time, that's the reason why we are losing money. So from here right now, you can see what I'm trying to tell you about right now that is even doing on Euro AUD. And this market was perfect. You might think that gold was not perfect, but look at it came back. I get it came back and retested what I'm expecting now right now. This retest came back and retested before, coming back to break structure, still became bullish, broke again, bullish. I get it. These are like 1913, 1940, 100 pips, 1913 to 1937. That's about 240 pips, just like that. So your lower time frames are explaining to you what is going to happen, while your higher time frame is giving you the overall picture of what is happening. So the lower time frames are there to deceive you and scare you out. Trust me, don't get carried away. No matter what is happening right now, this was my area of value. So if you want to keep expanding, let it keep expanding until I see I will not enter a full month here. I enter my area of demand and even see all this switch you are seeing. You see all this switch you are seeing. Are you getting it? All this switch back to the upside you are seeing, I need to see them. All this switch back to the upside you are seeing, I need to see them. So I need to see a switch even, put my stop loss under it, take my trade. If I want to swing to 2000, 2050, that's 1100 pips I've been talking about on all my videos already. So this is how the market actually works. I'll end this video here right now. My Euro AUD is recovering. My Euro NZ is recovering. I don't know if it will recover, but I just know that I will not leave that trade until it comes to this area or until it breaks this area where it switch to the downside. So this is what I have for you. And I will just say bye-bye for now because I've been waiting for this 1955. To check my images from my trades. I wish I can, find anyone I've uploaded. I think, sorry, let me see something. Hold on, hold on, hold on. I'm coming. I'm coming. Hold on. I'm out of that place. I'm coming. I'm looking for mm, a particular image where you see that I entered even when the market was even very, very going well in my favor. Okay, I have one. Okay. Let me place it inside the chart for you to see the last time. Look at this. When this market was going well in my favor in one of my accounts, Look at underneath here. What are you saying? This market was still in my favor, but I still placed a buy limit because I know that the joker might come and happen. Are you getting? Look at it. 1.6350. 1.6350. Are you seeing it? So you might just still be in profit, but I'm swinging this. So all these trades you're seeing right now, see 415. This one is still in line losses. 411 losses. 465 losses. This UNZD, this UNZD. So most of them are in losses right now. I am not leaving the trade until you break this area for me. Break it because my stop loss is like underneath here. Are you getting it? I have a $2,500 drawdown on that particular account. Are you getting it? So no matter what happens, I'm still in that trade because it might resume back and give my money back, or I got my loss because I still have money. I still have a lot of money to trade. So if this is going to go wrong, it's going to be like $1,200 drawdown. No problem. I will make the money back again because this is what I entered. So I'm swinging this until it fails. I am still in this market. This is what I wanted to show you guys. Take care and buy for now. But don't get carried away. This is still a valid head and shoulders pattern until we are unable to break above. Immediately we break above it, we test it. This market is continuing the bullish case scenario on the 4-hourly, the 4-hourly, the daily, and the weekly chart. But if this market switch to the downside, are you getting it? That means 1 hour now becomes what? Valid. Until then, learn how to take losses. The way you celebrate your wins, learn how to celebrate your losses also. This is what I have for you. Take care and bye for now. Bye.